All right, so that is basically the Gbpusd trade that I said I saw this morning. I didn't take that particular trade, but it is worth noticing. All right. So right from the daily, we have Gbpusd giving us this whole bearish structure. Price then shifted to bullish, and now we are basically in this whole bullish inception. All right. Yeah, basically in this whole bullish inception. So what I saw this morning was price going up when the news came in. This morning there was news on Gbpusd. So when that particular news came in, what I saw was over here we had yesterday's high and this particular area. This was the highest point price got to yesterday. And we all know that normally when there is an old high over there, right, that price swings up aggressively. With a wick, we tend to have a break of that particular area that caused that move, and then you shot from there, right? That's just by the way. Let's go to what I'm trying to explain over here. So what I saw is we had price wicking over here, all right, wicking above this particular area, and above this zone, what is over there is what we call the buy side liquidity. Okay, that area is an old high or previous day high, and above that particular area is tons of liquidity resting. Okay, so price took out that particular area with this particular wick. Then I went to the 3-minute time frame after price took that particular area off. I went to the 3-minute time frame. So this is where price taking out that particular high was. Now, looking at this internal swing, you would attest that this particular area was the low that was made prior to this swing, looking at this particular time frame, right? So we had a push down, a push down, a push, and then another push down that broke the particular area. So we first had over here our change of character. Let me go to 1 minute so that we can see it very well. We had our change of character over here. If you don't understand this concept, don't worry. When the course is out, you would understand everything. Okay. So above the zone is where the buy side liquidity was taken. Okay. So it is within that zone that I am looking to take that particular sell off. So we had the change of character, failure in swing, price dropped to break this particular area too. So upon the retest of the area on the 3-minute time frame, on the 3-minute time frame is where the trade was actually taken. So I had the break, the shift, right? And then price returned back. Let me take this one up. Price returned back to this last up close candle before the sells. So we have this up close candle before that particular sells. Price came in there. So that's where you normally see I will label that particular area as my entry zone. Price came to that particular area, giving the sells, right? Price giving the sells, your stop loss roughly above this particular high. And then you take profit, the low that pushed in price. Okay, so this is the lowest point. That area becomes your area of take profit. Mind you, that is 3-minute time frame. When you go to around H1 or something, you're going to see it's just a single or simple swing over there. So that is what I was talking about. All right. So when price even took this particular area off, we had an imbalance being created. We have relatively equal highs over here. Okay, relatively equal highs over here. Price came back to the zone that caused the massive push to the downside. And then we had that particular nice move, giving almost 1:12 R down to the lower aspect. Today's FOMC, I'm basically not taking any additional trade. The ones that I have, I'll push stop losses in break even, and then let's see how price unfolds. All right, so that's what I wanted you guys to see. That's what I wanted you guys to get yourself abreast with. It doesn't normally happen like this all the time, but when it happens like this, it gives you a better risk to reward ratio. Thank you all. I hope you enjoy this video.